It's your favorite YouTuber, guys, DS Learning Finance, financial educating you guys to freedom. For the beginners, by from beginner, every Sunday at 3 p.m. What are stocks? Are they safe to invest in? And how do I find good ones? These are probably the three biggest questions that you're going to ask yourself as a beginner in the stock market. That's why I made this video for you guys. It's about the stock market for beginners in the UK. You see, I've been in the stock market for about 3 years, guys, and I can vouch for it. If you do this the right way, there is some serious money to be made, guys. And a little bonus tip, right now is actually the best time to invest in the stock market because stocks are going for really cheap prices. So in order to fully equip yourself so that you're ready to enter into the stock market, you're going to want to watch this video, guys, because it's going to equip you with the tools that you need to get started. You people can trust me because I've made some mistakes in the stock market so that you don't have to make them. But before we get started, could you do me a big favor, guys? Share this with someone else who can also benefit from it. Subscribe with the notification bell on because that will really help my channel. And also follow me on all of my social media platforms down below. Starting off with the basic, guys, what are stocks? Well, if you typed into Google, you'll probably get this as a definition. A stock of a corporation is all of its shares into which ownership of that company is divided into. In my opinion, that's a terrible explanation, guys. It's actually best to explain it with an analogy. Imagine a cake, and this cake represents a stock for company A, and therefore ownership of company A. But with this cake, you don't cut into just 10 pieces. You can actually cut into thousands, hundreds of thousands of pieces. And each of those pieces represents what a share is in a stock. Therefore, the more shares that you own, technically the more company A that you own as well. This is what a stock is. It's partial ownership of a company. So even though you might be less than 0.01% of an owner of that company, you're still technically an owner nonetheless. And therefore you're entitled to the earnings and the proceeds that that company does year on year. These tend to be dished out on selected days of the year in the form of dividends to investors as kind of like a thank you gesture for investing in the company. This is one of the two simple ways to make money from stocks. The other method actually comes from the price changes. So sticking back to that analogy with a cake, imagine you go to a shop one day and then you find that the cake costs you X amount. But then you leave that shop and come back 5 minutes later, the cake changes in prices. It might go down an hour later. It might go up 3 hours later. That's what stocks do. They fluctuate in share prices. And it's this change that you can make some money from. And due to this, there is therefore an art to invest in. The conventional way to invest is to actually buy undervalued stocks, guys, and to sell them for the maximum overvalued price you can possibly sell them for. Whilst in the meantime of owning that stock, owning those shares, you're keeping the dividends as pocket change. Cool, so now we're on to our stocks safe to invest in. Now, this is a very tricky question to ask because it's totally dependent on the person who's looking at that one stock. If you're the sort of person to not leave any stone unturned, like me, who likes to go into further detail, in-depth research on that stock, then you're likelier to find a good stock to invest in just because you're going to sift through all the nonsense. Just to give you guys a sort of perspective, out of 100 stocks I look at, I'm probably happy with just one. Yeah, but the reward and the satisfaction in doing all of that research means that I'm able to take confidence in that because I've been so skeptical about all of those other stocks. But if you're the sort of person who doesn't want to put too much effort into it and has like effectively a lower standard to invest in stocks on, then this can quickly change from investing to gambling. Now, on to the most important part. How do you find good stocks to invest in? This is a very good question to ask because in just one country alone, there could be thousands of stocks to invest in. So how do you find the best of the best, the creme de la creme stocks? For me, this comes in 2 stages, guys. Stage 1, screening, a quick search. Now you can find loads of these screeners online, guys. The one I use is called the London Stock Exchange Screener. And I have left the link down in the description box below there if you want to check it out. Give it a go, play around with it. What they allow you to do is set your own parameters so that any stocks that fall into that category meet that standard that you've asked of it. So basically you can filter through all of the nonsense and focus on the good stuff. But even here, a lot of investors can go wrong, especially beginner ones, because they don't know what to look for. So what I like to do is I like to break it down into sections. 1, establish what group of stocks you want to invest in, guys. Is it going to be in the biggest stocks, the ones that might have already fulfilled their maximum potential? Or is it going to be in the riskier stocks but have a load of room to increase by? These are questions you guys should be asking yourself. What I personally like to do is find like a middle ground. I like to find safe, medium sort of stocks that have a lot of room for potential and catch them at that undervalued price. 2, I like to aim for my net profits to be 10% of the market cap. Now the market cap, taking us back to that analogy, is effectively the cake, the whole cake. But obviously I mentioned that the prices change from moment to moment. So the market cap now might be different from the market cap 10 minutes later, because obviously the share price has changed. But what it basically tells you is the maximum amount of money at any given time to buy all of the shares in that company. And the net profit is basically the profits after all of the deductions. So what am I telling you guys? I'm telling you, if I was to buy out all of those shares in that company, I would expect around 10% to justify me doing so. It's a measure of profitability. At the rock bottom, I don't like to go any lower than 6.5% roughly. 3, P ratio. And what this parameter is especially useful at doing is telling you whether a stock is undervalued or overvalued for the share price it's going for. And obviously you want to invest in the undervalued stocks. So the higher the PE ratio, the more overvalued that stock is likely to be. For me, I have a rule of thumb. I don't like to invest in stocks that have a PE ratio higher than 25 to 30. Now this isn't a set rule, but it's a general trend for the stocks that I like to invest in. 4, dividend yield. Now, dividend yield basically tells you for how many shares you own of that company, how much you should expect back in terms of a profit as a thank you gesture for investing in them. Now, ironically, you don't want too high of a dividend yield because even though it means you get back more money from the company, it's not sustainable. So what you want to aim for is a more sustainable dividend yield. And typically this ranges between 3 to 5%. 5, diversify your stocks. Now this isn't going to be an issue for maybe your first stock, but this is going to be an issue for your second, third and fourth stock that you might get. Diversifying your stock is a way of minimizing your risk factor. Why? Because you're not putting all of your eggs into one basket, guys. You're spreading it across the platform. If you put it into one basket, imagine if that market just dropped. What would you do? Your whole portfolio will be wiped down. Whereas if you put it across the field, yes, one stock might drop, but the others might go up in retaliation of it and therefore act as a buffer for you. There is safety in diversifying stocks, trust me. And 6, the share price / last close price. Now for me, this is so important. I don't like to invest in stocks that are more than £30 per share. Why? Simply put, it's expensive, guys. There's more room, there's more potential to grow from a cheaper stock. Remember, at all times, you want to buy low and sell high. And this is all stage 1, guys. Now it's time to move on to stage 2, guys, which is in-depth research on those stocks specifically. And this consists of 3 parts. 1, the financial documents. Now, stocks that have good financial documents, it's not a coincidence that they tend to be the best stocks to invest in because it shows the health of that company. So this includes the balance sheet, guys, the income statement and the cash flow statements. You need to make sure that it's making money at all times, year on year, and it's increased consistently across the years. And it's basically the assets, the income, and the positive cash flow for those financial documents, respectively, need to be more than able to cover their negative counterparts. 2, reading the financial reports. Now, this is the one that a lot of people don't like to do. Why? Because it entails reading huge documents. So documents that might be 200 pages, for example. But I guarantee you guys, as you get used to it, you're able to go through them in a matter of like an hour, the very max. But the reason why I tell you guys to read these financial reports is because they don't just talk about the financial documents. They also tell you guys what else is going on in that company, which is just as important. So you need to know what the company is planning to do, what the company has planned to do, why it hasn't met its objectives, why it is meeting its objectives. All of these things are things that are valuable for you as an investor to know. 3, find information surrounding that stock, recent information. Now, this involves reading reports from experts, maybe the gurus, and also looking at the latest news surrounding that stock. What is it saying, guys? If it's good, then you know you can take great gratitude in that because you've been able to find that stock without that person telling you. And a lot of investors rely on those experts and those gurus to do so. And if it's bad, don't be discouraged. Find out why it's bad. Do you agree with what that person does? A lot of these financial experts and gurus have a lot of incentives to direct and mislead effectively investors down a certain path. So don't just fall for it. Ask the questions yourself and act according to what you think. I hope this has helped you. The people who want to get started in the stock market, but just don't know how to go about doing it. And that's the end of my video, guys. Make sure to hit the like button down below. Subscribe to my channel with the notification bell on. It will really help me grow. And follow me on all of my social media platforms down below. Above all, have a good day, people. It's your favorite YouTuber, guys. DS Learning Finance, financial educating you guys to freedom. For the beginners, by Form Beginner every Sunday at 3 p.m. DS Learning Finance. Bye, guys.